Pt1, what you Gucci done today?
Bankroll look like a book. Diamond shine to make the bitches look. Pop dirty, niggas wanna cook. Free pros when I add the cut. I'm getting money, I don't give a fuck. I'm getting money, I don't give a fuck. Getting money, I don't give a fuck. Talking heavy, but ain't got enough. Fuck running off.
What up, though? Welcome back to my channel, The Hustler's Way, where the goal is to get to the bag every day. Now, before I get into the actual video, what I want to say and discuss here is like all the comments that y'all be leaving under my other videos. First and foremost, I am very financially literate. I don't need y'all telling me to invest. I don't need y'all to tell me that my cash is losing value if it's not sitting in a money market savings account or not invested. I have a high percentage of my net worth invested, and I have a small percentage that is actually liquid in cash, because I'm not a fan of having everything invested and not having no actual liquidity that I don't have to run and sell stocks or cryptocurrency or whatever assets that I have. In this video, I will be showing you guys the unorthodox methods that I use to invest after doing my due diligence, such as, let me look at my notes. Really quickly, when you're investing, there's certain things that you want to look for when you're doing your due diligence. These things are trends in earning growth, company strength relative to its peers, debt to equity ratio with industry norms, how the company treats dividends, and leadership, executives, company culture, and things like that, corporate culture, all that. Like, after you do all that and you know, look at the future of the company, how it's positioning itself, and all your due diligence that you're going to do the traditional way, I have a very unorthodox way in which I invest and choose companies that I invest in after I do my due diligence. So let's get straight into the video. I'm going to be investing $5K, not on my main account. For this video, I will be using a Robinhood account that I casually invest into, and I'm gonna start building this portfolio up and just letting you guys keep track of my investments. But most of the investments that you're gonna see in my Robinhood account, I have in my other accounts, my other brokerage accounts. The reason why I'm using Robinhood to show you guys is because, one, it's extremely user-friendly. Two, it has a nice interface, and it's just simple to like follow, and it flows well. So first and foremost, let me put my portfolio on screen. Give me 2 seconds. First and foremost, when I'm investing into a company, the first thing that I look for after I've done my due diligence is the relevance that that company has in my life. Like, is it something that I use every day knowingly or unknowingly? How relevant it is? How many like different products or different aspects does it find its way into my life? So what we're going to do is look down my considering investing portfolio. I'm going to probably be looking off camera a lot just to look at the different stocks that I consider investing in. So the first stock we have is Facebook, well, formerly Facebook, now known as Meta Platforms. It is extremely prevalent in my life. It's something I use when it comes to the multiple businesses I have. It's something I use as a form of entertainment when I have downtime and I'm not working. And as far as WhatsApp, I use that a lot to talk to overseas vendors and overseas business relationships I have. I also use Facebook as in terms of Instagram and just the Facebook features in general. I run a lot of Instagram and Facebook ads and things of that nature. It's extremely prevalent. So it's something that I'm strongly considering investing in. But before I pull the trigger on it, I'm gonna just go through the other investments that I have. Now we have Airbnb. It's something that I really would like to invest in, but again, the 3 things that I look for when I am investing, and I want 2 of these things to at least check the list before I invest in a company after my due diligence. The first one is relevancy in my life. How often do I come across it, knowingly or unknowingly, and is it something that if it stopped existing, would it cripple me in any way, shape, or form in terms of like financials or just convenience in my life? And then after that, I look for 2 things, but we gonna combine them in one. You have compound annual growth rate, and I combine that with market share. So I look at the industry that the particular stock or company is in, and I look at their market share. after I look at their market share, I look at their compound annual growth rate of the industry, and what are they doing to increase or maintain their market share in the particular industry that they're in. And thirdly, after I look at that, the most important thing to me is just like, if it stopped existing, like what would happen? Like, how would it affect like the economy, the world, and just life as we know it? So those, I want companies to check at least 2 of those once I consider investing in them after my due diligence. So with Airbnb, it doesn't really check any of them. It's just a very enticing growth stock that can possibly triple or quadruple within the next 3 to 4 years. In my portfolio, I am a growth stock investor. Like, that is my investment strategy. I'll go over the different types of investment strategies that you can use to get started building up your portfolio. But with Airbnb not checking any of them, and honestly, the due diligence I did was not very appealing in anything that I wanted to like invest in. But I'm gonna go through the process of elimination and just remove this. This is not something that I will consider investing in at the moment. Now, Take-Two Interactive Software is basically a gaming company. Grand Theft Auto is like the biggest game that they have next to, I believe, Red Dead Redemption under their like list of like games that they produce. I am not a gamer, but I understand the gaming industry and the gaming market, and I am a person, when a game comes out, I do not play it. I just go on YouTube and watch a full walkthrough. Grand Theft Auto is coming out without a shadow of a doubt. It will be like the biggest, Grand Theft Auto 6 is coming out soon. I don't know how soon, maybe the next year, within a year or 2 years. But I don't play games. But it's just something enticing that kinda has relevancy in my life, because even though I don't play them, I might watch a walkthrough. But it doesn't check at least 2, so I'm going to eliminate this from considering investing. Uber. I use it not frequently. Very, very, very rarely do I use Uber, but I do use it. It is convenient, but not extremely convenient, where if it stopped existing, it would like just inconvenience my life. Secondly, it's not extremely relevant. If it's not relevant at all in my life, I have 2 vehicles that I use, so it's not really ever a time where I need to use Uber. With that, we go by compound annual growth rate and market share. It does have a good market share. It does also have a nice compound annual growth rate, but that's only checking 1 of the 3 things that I want at least 2 to register before I invest. So I'm going to remove that, and quite honestly, the due diligence wasn't very appealing. I didn't like the company's financials. I didn't like the balance sheet. I didn't like their debt. I didn't like that they don't really make any revenue. So it's a lot of stuff that would have kept me from investing in it just off of my due diligence, but I just put it there for the video just to show you guys and give you an example. Again, this is not I am not doing a detailed video on how to invest in stocks and do your due diligence. I'm showing you my unorthodox methods in which I invest in stocks after I do my due diligence, and it's not financial advice. I forgot to say that, but this is not financial advice. I doubt I'm gonna lose all my money, but don't try to copy me. Thirdly, we have relative income. Honestly, I ain't even gonna talk about that. I'll probably talk about that later in a dividend video. You know, it pays a monthly dividend, but I'm not gonna invest in it at the moment. Now we have MU. MU is a very appealing stock. I feel like it's undervalued. I believe it's a sleeper growth stock, but as far as prevalence in my life, or relevance in my life, it doesn't have a lot of relevance. It's a microchip / semiconductor company. They're more so geared towards memory and RAM. I can't really think of too many different scenarios in which it comes across in my life, whether knowingly or unknowingly. Secondly, they do have a nice market share in their particular industry. The compound annual growth rate is very high. I'm not going to show that on the video, but you can for sure hit the Google on, go to Google University or google.com and look up the compound annual growth rate of their particular industry and things of that nature. With that being said, If MU ceased to exist, would it inconvenience me in any way? I doubt it. I highly doubt it. I could be wrong, but I doubt it. So I'm going to remove that and not invest in it. It's like process of elimination. Roku. Now, this is a very, very appealing stock in terms of market share and compound annual growth rate on top of the relevance that it has in my life. Roku is on all my TVs. It is actually built into the actual operating system of the TVs that I have. I find myself using Roku a lot. If it disappeared, it wouldn't inconvenience me in the slightest sense, because there's different streaming services, like a multitude of them: Disney Plus, HBO Max, Netflix, Shudder, just everything. But it's relevant in my life. I like the market share. I like the compound annual growth rate of the particular industry that they're in, aka the cord cutting industry and streaming industry. I like a lot of the company financials. I did my due diligence. I like a lot of what I see, and it's like a stock that I would want in my portfolio because of how fast it's growing, and it's a growth stock. A lot of people may view growth stocks as like they're extremely undervalued or they're extremely overvalued. It shouldn't be worth this much, but yada yada it is. But who cares? The stock market will never make sense, period. A lot of stuff doesn't make sense. Yes, it is overvalued, but is that going to make it go down to what people value it? Maybe under $100, maybe $150. But this is a stock that I am strongly considering investing in. But let's continue to go through the list, process elimination, and to get down to the meat and potatoes. Square. Extremely relevant in my life. If it did disappear, it would in a way be very inconvenient because I use Square to process a lot of payments and their particular technology and their platform and things of that nature. I find myself using it knowingly and unknowingly a lot of times. If you go about market share and compound annual growth rate, this is probably like the best company to look at just off of that alone. But when I did my due diligence with the company, corporate culture, the financials, the balance sheet, debt, equity, liabilities, short-term and long-term, I don't really like the stock. I purchased this stock before the pandemic when it was about $70. Had about 20 shares on my other portfolio. I sold out because I really wasn't believing in the long-term vision of it. I just feel like it's highly unstable, and you have companies like Visa and MasterCard with like a strong footing on the financial industry, even though Square is fintech, but I feel like they can do the same thing a lot better. They have wide economic moats. They have strong financials, great balance sheets, great growth. So as far as me investing in Square at this moment, I'm gonna have to pull the trigger and say no, but it could change sometime in the future. And I accept all financial, not advice, but you know, if you got any pointers or anything you want to say in the comments, I will read it, take notice to it, and if I think it makes sense, I'll probably follow your advice or, you know, have a healthy discourse in the comments. But for the most part, my investment style and how I go about things has worked for me for the past 3 years, so I'm probably not going to change. My portfolio has been doing very good, whether it's on Robinhood or on my other brokerage account. So just follow along. I'm showing you what works for me. If you don't like it, you don't gotta invest, you don't gotta follow, you don't gotta listen. You just like the video and keep it moving. Next we have Disney. Disney is a company I actually own. I sold once it, I think it peaked at like $190. I initially bought Disney at like $90 a share, so I took profits. Relevance in my life, extreme, like in so many different ways. Outside of that, once I've done my due diligence, Disney has so many different streams of revenue, like how it makes money, whether it's the Marvel movies, Pixar, or the Disney movies, the Disney Plus streaming app, ESPN. They can like reboot the Marvel series indefinitely because of how they're like setting it up. It's just so much that goes on with Disney, just makes it a very, very enticing company. The toys, merchandise, the Disney stores, like they got their hands in so many different streams of revenue that it's just extremely enticing. It's relevant in my life. Market share, compound annual growth rate of the particular industry is beautiful. You can Google it. I'm not particularly going to go over that. I'm just doing process elimination and just showing you how I invest. If Disney disappeared, would it inconvenience me in particularly? Probably not, but it would be a very, very, very just weird thing if Disney ceased to exist. Like, I just can't see it happening. So this is a company I'm for sure going to invest in before this video ends. Like, I like everything about it. I owned it before. I just took profits. It's back down. I'm going to buy in at this price and probably get 2 or 3 extra shares from the profits that I took previously. Visa and MasterCard, I'm not going to talk about them separately. There are 2 companies that I consider investing in. Relevance in my life, extreme. I am a credit card fanatic. They have strong hold, like they have a strong economic moat within the financial industry. If they disappeared, I would be extremely inconvenienced. I find myself using them every day. Market share and compound annual growth rate is beautiful in their particular industry, and they still have a lot of room to grow because of the new wave of fintech that's coming out. They haven't even like scratched that market yet. I'm sure that's something that they're looking to do in the future. I cannot imagine them not doing it because it's the next innovation within finance. With them having strong balance sheets, and just everything. Once you do your due diligence, these are 2 companies that I am highly considering investing in. I'm just not sure which one at the moment. It's a possibility by the end of this video they will be in my portfolio, but I can't say for sure. If they're not in this investing video, I will be posting another video where I invest between $5,000 and $10,000, but they're going to find their way into my portfolio soon. So these are 2 companies I'm strongly considering investing in. Affirm, fintech, not relevant in my life. If they cease to exist, it wouldn't inconvenience me in any way, shape, or form. They do have a nice market share, and the compound annual growth rate of their particular industry is phenomenal. But they only meet one of the 3 things that I want them to at least check off 2 from my checklist. So I'm not going to invest in them at the moment. It could change within 6 months or maybe a year if they, check off one of the 3 things I need. Check off at least one more of the 3 things that I need, because I only need 2. And again, this has worked for me in all of my investments. I rarely see my portfolio down, even though nowadays I'm still up crazy. Nerd Wallet. I don't even know why it's in here. I thought about it. I'm not going to explain it. Great company, but not something I'm looking to invest in just off of how they make money at the moment. So I'm going to remove that. AMD. This is a company for sure by the end of this video will be in my portfolio. I love everything about this company. I owned it back when it was $27 before the start of the pandemic. I had about 25 to 40 shares between my 2 brokerages. I had a few on Robinhood and some of my other brokerage. The only reason I sold out, it had this crazy run up that I haven't seen since I've been at AMD. It went from $27 to $50 within a month. It kind of scared me, so I'm like, let me take profits and pull out. When it pulled back, it never pulled back. So I would never sell out a company again that I believe in. Because honestly, every company that's in my portfolio or any company that I will invest in, it is a company that I will hold, die, and pass down to my children and tell them to pass down to my grandkids. So this is a company I'm for sure going to invest in. Relevancy in my life, extreme. I have a laptop that uses their software. I'm sure it's plenty instances where I find myself unknowingly coming across AMD in some facet. They just cut a deal with Facebook that's awesome. The due diligence is great. I like the CEO. I like the company culture. I like what the CEO has been doing. The leadership is great and everything in the company. The compound annual growth rate for the industry is beautiful. I believe they're number 3 or 4 in market share. Number 1 is Intel. I believe Nvidia might be number 2. and I can't really remember, but go ahead, get your Google on to correct me if I'm wrong. But the way the company is designed, especially with the leadership, I only can really honestly see them continue to gain traction when it comes to market share. They check off 2. On the third one, if they cease to exist, would they really inconvenience me? Not necessarily, but I just like what the company is doing. I like the leadership. I like the vision. I like I like the innovations and everything about AMD. So this is something I'm going to invest in. Another thing is, when I do invest, I am like a sector investor. So you might see 3 companies. There are all semiconductors or microchip companies that I own. You know, a lot of people might be like, hey, get into an ETF like SMH or something like that. I don't really like ETFs. I like just getting directly into the stock and like playing it that way. Like, that's my favorite way to invest. I'm not trying to build a defensive or dividend or like safe portfolio. This is a growth portfolio. I'm looking to triple, quadruple, or even quintuple like my investments within 2, 3 to 4 years. And then once I get a big enough portfolio between my 2 brokerages, then I'll probably move into dividend stocks and defensive investing and things like that, and value investing. But right now, this is my investing strategy. This is what I'm doing, and it's working. Another company that I considered investing in that really doesn't check off any of the 3 things that I look for. I just had it in my portfolio because I did my due diligence. I like the financials. But it's a few things that scare me. It's a Chinese company, and the biggest thing with Chinese companies is that the Chinese government is very overbearing, and if a company gets too big, they can shut it down easily. And it's like it's quite possible that you can see a Chinese company like investment go to 0 or like cuts in half or 75%. I think Alibaba cut in half for some things that happen in China with the government, things like that. It doesn't check off anything. I just put it in my portfolio, process elimination. Before I eat, like I just throw it in my portfolio after my due diligence, and then I do my checklist. So people are like, hey, you probably knew from the get-go that didn't mark off any of the 3 things that you look for, but I just throw it in there and do the process elimination later. So this leaves. Next we have Apple. This is a company that I only own 1 share of in this brokerage. This is something I'm gonna invest in. It's a growth company, but it doesn't have a lot of room to grow. It's not. I'm probably not going to see this investment triple within the next year, or quadruple within 2, or triple within 2, 3 years. But it's something that's going to provide steady revenue. It's something that when I put my money there, I for sure don't have to worry about like it going to 0. They did a stock split, which was beautiful. I believe they have a, let's look, $2.5 trillion market cap almost. It checks off all 3 of my unorthodox checklists. Relevance, extreme. Use Apple, iPads, iPhones, their streaming service, Apple Music. It's a lot. They're extremely relevant. If they disappear, would it cripple me? Yes, and plenty others. Compound annual growth rate, market share, beautiful. Like, it's going to be in my portfolio by the end of this video. Great company, probably the best balance sheet in the stock market at the moment. Tim Cook, great CEO, probably the greatest CEO of all time when it comes to making profits. I believe Apple is still the most profitable company in the world. Great company, like who wouldn't invest? Like I wouldn't be, I love Apple so much and believe in the company and the vision of Apple so much, I would put all of my money into that one stock and just leave it there and not worry. With that being said, we have Lemonade. It's a company that I actually use. I actually like it. It's extremely convenient. It's something that very relevant, well, not very relevant, but relevant enough in my life. Okay, I'm back. It's relevant in my life. If it ceased to exist, would it inconvenience me? No, because there's plenty other insurance companies that I can use for renter's insurance. but it's convenient, user friendly, and I just like how streamlined it is. Market share and compound annual growth rate is okay for the industry. They don't have a huge market share in the overall insurance industry. So at the moment, no. Possibly in the future, yes, it will be something that I invest in. Okay, we have the Taiwanese Semiconductor company, TSM, I believe on another exchange is like TSMC. This company is extremely prevalent in my life and like almost everybody's life in the entire world. They are a semiconductor manufacturing company, and they have the most prestige client list in any world, like in any company, like just their clients. They make chips for Apple, Nvidia, Qualcomm, AMD, like all the big microchip companies and hardware and software companies. They're probably making and manufacturing the chips for them. They have an extreme economic moat, strong foothold on the particular industry that they're in. The compound annual growth rate for the industry is beautiful. Their market share is beautiful. Their client list is beautiful. I don't see them ever losing any of their clients to any competition or anyone just because of how big they are, how competitive they are, and just the company overall leadership and like vision. So I'm invested in Nvidia. I said that I was going to be investing in Apple. I also said that I was going to be investing in AMD. They make semiconductors for all three of those companies, which are three juggernauts that are on their client list. Relevancy, extreme. In my Apple laptops, all types of things. Even in my portfolio, they have a hand in a lot of the companies that I'm invested in. Again, I said compound annual growth rate and market share, great, beautiful. Company financials is great. Due diligence was awesome. If they cease to exist, the world would be in a horrible predicament. So this is a company by the end of this video that will be in my portfolio. Microsoft. They are another competitor for best balance sheets in any company in the world right now. Relevance in my life, extreme. Compound annual growth rate times market share, plus market share, great. Cease to exist, it would be a bad day for the world. So it is a company that I am considering investing in at the moment, and it might be in my portfolio by the end of this video, but we'll see. But it's something that's going to stay. It checks all three. The trade desk. This is another one like Baidu. It's not a Chinese company, but I just put it here, but I know that it's nothing at the moment that I'm going to invest in. Compared to all the other investments I have right now that I'm considering investing in. American Express, they're cool, but I like Visa and MasterCard better. But you pretty much get the gist of it. Beyond Meat, now I am a vegan. I've been a vegan for a very long time. Beyond Meat, extremely relevant in my life. I find myself using it knowingly. It's prevalent knowingly, and relevant knowingly and unknowingly in my life. If they cease to exist, I would be in a very bad predicament because I like the company. I like the vegan meat that they make. I like all the food products that they make. I like their vision. I like a lot about the company. Compound annual growth rate plus market share, great. I believe they're the leader at the moment in market share when it comes to meat alternatives and just vegan food in general. It's going to stay in my portfolio, but more than likely at the moment I will not be buying it in this video. So let's see what we have left in my portfolio. We have Facebook, Roku, Disney, Visa, MasterCard, AMD, Apple, TSM, Microsoft, and Beyond Meat. So I'm going to buy 10 shares of AMD. It's after hours, so I'm going to do a limit order. I want to buy it at 148. You know, when the market opens, it might, you know, shoot down a little bit. And extended hours. I'm gonna do extended hours. Yep. I'm gonna say good to February. I believe it'll go through tomorrow. I want to buy 10 shares of that. It's going to be $1,480. That's something I want in my portfolio immediately. Should never left my portfolio. Secondly, another company that I want to put back in my portfolio at the moment is Apple. I'm gonna buy 7 shares of that for, I'm gonna set a limit price for $148 also. Same stuff. I'll go over how to do this in the different like ways you can buy stocks. Limit orders is basically like, I had situations in the past where I will buy stock after hours, especially with growth stocks. It would probably be like $60, but when I wake up, I done bought it at 80. So now I know to set limit orders, especially when buying during after hours in the market. Good to cancel. Let's do that. $1,036 is how much it's gonna cost me. Order receipt. Damn. Now we have $2,500 left to invest. So now I'm gonna be a bit more meticulous about what I'm investing in. I want Disney. But right now I'm more so focused on growth. So I will buy 8 shares of TSM. Limit order 119. Try to get a few bucks off. Bam. Bam. Good to February 7th, 2022. 3 months. I'm gonna get it way before then, but just in case something happens. $952. Buy. And just to show that like I'm serious about investing in these, when the orders, when the trades do go through and the stocks are purchased, I will put a small snippet or screenshot of them actually being in my portfolio. Now we have $1,600 left to invest. I like Facebook right now, I really do. I like everything they're doing. I like the metaverse. Even though you got so many conspiracy theories around it, like I don't care. I like that they just partnered up with AMD, and I see so much growth and so much good to come behind this. Like they haven't even reached a $1 trillion market cap yet. Like, so they have a lot of room to grow. Like if just getting to a $2 trillion market cap, the stock would double. So market cap isn't really that important, but we're gonna go into the real like due diligence and details and everything from PE ratios and stuff like that, how you actually get down to investing. But I think I want to buy 3 shares. 4. I think I'll grab 4 of Facebook. But wait, let's set a limit order because I don't want to. You know, something can happen and it shoot up to $400. Like that can happen, and I didn't basically bought it at the high, so I want to buy it at $335, get $3 off, save $9 if I can get it that. Extended hours good to February 7th. It's going to be $1,340. Invest. I believe I probably got like close to $600 left. Let's see. Oh, $294. Okay. $294. What looks enticing? What do I want in my portfolio at the moment? Right now, I think 2 more shares of this would be good. limit. Like they just have such a strong foothold. They got like the best client list that you would want for this particular company in this particular industry, like Apple, AMD, Nvidia, Qualcomm. Who else? They got a very prestige client list, like some of the best companies in the world with great leadership that I already own in my portfolio or buying or considering to put in my portfolio. So I'm going to just add 2 more shares of that for, what was it, 119? I can't remember, but hey, don't matter. I want to own it at any price at this moment. 238. So that is pretty much done. It ain't much I can buy with $56. I can probably buy some more crypto. 56.08. Buy that. I have way more crypto than this. I actually go over my crypto portfolio in a different video. I just got 1 Ethereum in this, but I have way more Ethereum. Like, I'm like super bullish on Ethereum. I don't own Bitcoin. I don't really care for Bitcoin, but I'll go over that in a different video. And insufficient funds. Oh, let's just do 56 then. Got 8 cents left in my portfolio. So if we look at my portfolio at the moment, I like to keep a very small portfolio. I am not a fan of owning 10, 15, 20, 30 different stocks. I try not to go over 8, and I get 8 companies that I truly understand. The company as a whole, I understand their future plans. I understand the different types of innovation and threats in their particular industry. I believe it's a company that I will be around once I pass and my daughter passes and grandchildren and things of that nature. So I only invest in companies that once I buy them, I will literally forget about them and come back and they done triple. So all these companies in my portfolio, I truly believe in. Again, you're looking at my portfolio. I want you to understand, this is just my Robinhood account. I have a bigger portfolio than this in my other account. So I'm like, why you only 3 shares of Tesla? I own more shares of Tesla. Why you only got 8 shares in Nvidia or this or that? And like, don't do that. Mind your business. If I want to show you that other portfolio, I will. Right now we focusing on Robinhood. So I'm gonna end the video with, it's the hustler's way. The goal is to get to a bag every day. Tell me how you like the video. Tell me what other videos you want to see. I'm gonna get more consistent with posting. And to top it all off, this will be a consistent video. It might be twice a month or once a month where I show you investing between 5 to 10K. If I have a good month and earn a lot more money than usual, it could be 15K or 20K. Right now, we're just gonna stick to 5K. The next video might be 10K or 5K, but I might add 1 or 2 more stocks to the portfolio or double up on the stocks that I already got. Because I'm not trying to have my money spread out too far over a bunch of different companies, and it kind of like balances my portfolio rather than growing it. So don't forget to subscribe, share this video. More videos on financial education, literacy, stock. It will not be any more videos on credit at the moment. I am in the process of building an app that will repair your credit for you. That's all I'm gonna say, so stay tuned.
Yeah. Bankroll look like a book. Diamond shine make the bitches look. Pop dirty niggas wanna cut. Free pros when I add the cut. I'm getting money, I don't give a fuck, nigga. I'm getting money, I don't give a fuck. Getting money, I don't give a fuck. Talking heavy but ain't got enough. Fuck run it off, I'ma run it up. Stay down till I get it up.